Hello traders, the title of the video is practical fifth Elliott wave ending diagonal technical trading tips. Alright, so if you do not know what is the ending diagonal pattern, you need to go to www.24elliottwaves.com and check out the ending diagonal. Alright. The internal waves of the ending diagonal is free. Now, you have to understand that we are saying free 5 times. So 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up, forming the ending diagonal. The ending diagonal is a triangle that is formed during the fifth Elliott wave when the fifth wave is subdivided into 5 minor waves. Each minor wave is subdivided into 3. Though, generally speaking, when we are talking about 3, we are talking about a correction because the fifth wave has been subdivided into 5, so we're thinking of 5 as an impulse move, all right? But each minor wave has been subdivided into 3, alerting us that people are selling at the end of a bullish trend, or people are buying at the end of a downtrend. So the ending diagonal at the end of an uptrend is alerting us that there is a high chance that the correction that will follow that fifth Elliott wave is likely to be sharp, because they start selling during the fifth Elliott wave, and the structure of the internal wave of that ending diagonal is alerting us that people are selling, though we are now in a bullish fifth Elliott wave. The opposite is also true in a downtrend when we have the ending diagonal of a bearish move in the fifth Elliott wave. The structure free is alerting us that though the price is still going down, the structure of the ending diagonal at the end of a downtrend is alerting us that people are buying. So we are likely to see a sharp correction to the upside. Okay. So I will not dwell on it very much because we talk about it at 24elliottwave.com. Check it out, where I explain to trader what one needs to know about the ending diagonal. Now, by the way, there was a comment in the comment section that I should keep the video short. All I will say to traders is this: some video will be long, some video will be short. Average video on this channel will be like 20 minutes. We need to understand that YouTube love long form videos. So as a YouTube creators, we cannot just give traders 14 minutes a video. Some video will be 30 minutes, some video will be 20 minutes, some video will be even 1 hour or more. So don't even bother to put that comment again, because it's not going to change anything. Some video will be short, some video will be long. Alright, so we go through the same thing. I watch video on YouTube that are 2 hours, some video are 1 hour, but some topic will be very short, even 9 hours, 9 minutes, 10 minutes, 40 minutes. So those type of video will be very short. Now, some essential tutorial can go up to 40 minutes. So if you don't want to watch the full length of it, that's fine, okay? Just watch what you want to watch, or watch it a bit by bit. But we cannot put a limit on the length of the video. Some video will be long, some video will be short. So that's it, all right? All right. So talking about the ending diagonal right here, all right? So now we have the ending diagonal. So the mistake that a lot of Elliott wave traders very often will make whenever they see this pattern, which is the ending diagonal, they say a sharp correction is going to begin, and the correction will be very deep. So if you are here now, this is what will be going through your mind if you understand this, all right? But sometimes you'll be surprised that the correction will not be sharp or will not be deep. Why? Usually, the main reason is due to the a higher degree wave count. So we are now on the monthly chart. We have identified the ending diagonal for this stock. Okay, Costco Wholesale Corporated. This is an American stock that belongs to the consumer defensive sector. EPIC COST. Charlie Oscar Sierra Tango. Now, the point I'm making here is that so because we are on a monthly chart, you say, all right, going to be a sharp correction, going to be deep retracement, but we need to combine always, okay, our wave count on one time frame to the higher degree wave count. So I've done my homework, so this is to simplify a bit the discussion. So this is the first wave of a higher degree. So from here all the way up here, this is the second wave of a higher degree right here. Pay attention to the black numbers, all right? And from here all the way up here, from here all the way up here, that's the third wave of a higher degree. First, second, and third wave of a higher degree. So the move that we are talking about now, from here all the way up here, pay attention to the black letter. This is the third wave of a higher degree, which has been subdivided into 5 minor waves. Now pay attention to the red numbers. First minor wave, second minor wave, third minor wave, a fourth minor wave, and the fifth minor wave. So the fifth minor wave of the real third wave has been, okay, an ending diagonal. That ending diagonal is free, 5 times. All right, here it is. So as you can see, if you are here now, you'll be thinking of a sharp. You can see there was a sharp move now. You see the first reaction here, boom, down. So this is the acknowledgement of that okay, ending diagonal. Professional did sell it big time, and they load it big time. It probably crashed through the triangle. But now that the price came out of the triangle, it's just slowing down a bit here. Why is it slowing down? Why is not rushing it down very fast? All right. There are a few things going through the mind of traders here. So you are Elliott trader. You don't want to forget, okay, about the normal technical analysis. So I have done a bit of work already. So you can see I highlight a channel here. See those 1, 2, 3, 4 candlestick bar form a rising channel. That's the blue channel. If you measure the width of that channel, you project it down. The direction of the price will bring you first time here. So you can see that as the price somewhere in the zone, price crash out of that blue channel. It came to the edge of that projected channel, the blue one here. This is the end of it here. And it come out of it again. We project it one more time using market geometry. All right. And now we are now on the edge of okay, the second projected channel. So though we are area weight traded, we can use market geometry when we are using the area weight theory to help us to manage the trade and also to time the trade instead of just relying only on the wave patterns. Now, how far this move will go, because it's a correction at the end of the fifth wave, but that fifth wave is the fifth minor wave of the real third wave of a higher degree. So we are now in the fourth wave of a higher degree. But if you are just if you just go 1, 2, 3, 4, 5, you say ending diagonal, George said that there will be a sharp correction. That correction may be deep correction, and you are banking on it that it's going to go down more. That can be a mistake. It doesn't, okay? It doesn't contradict, okay? The theory relating to the ending diagonal is the mistake that one is making here is just one is just using one time frame and one is not paying attention to the higher degree wave count. So paying attention to the higher degree wave count, we will apply Fibonacci retracement from the beginning of the higher degree wave count, which is the bottom of the wave 1 of a higher degree, to the top, okay? To the top. No, this is not what we should do now. here we are. If we apply the Fibonacci retracement from the low of the third wave of a higher degree to the top of the third wave of a higher degree. So this is the beginning of the third wave of a higher degree. This is the end of the third wave of a higher degree. The black numbers here. So that's the third wave of the higher degree that has been subdivided into three. We apply Fibonacci retracement to that third area wave. And because we are now expecting the fourth area wave, the third wave of a higher degree has been extended because it went above the 161.8% Fibonacci extension level of the first wave of a higher degree. So it's an extended, third area wave. So in normal condition, repeat, in normal condition, we'll expect a shallow fourth area wave. Though we have an ending diagonal here, if we forget the higher degree wave count, we will assume that we will have a deep correction here, and that will be the end of the correction. But it's not going to be deep. Theoretically speaking, we are now in the fourth wave of a higher degree. Third wave of a higher degree has been extended. There's a high chance that that fourth wave of a higher degree will not be deep as we will expect it after we have seen an ending diagonal in the fifth wave. Also, that fifth wave is just the fifth minor wave of the real third wave. So we will highlight which level, the 38.2% Fibonacci retracement of that third wave of a higher degree from here to here. That's the third wave of a higher degree, and we highlighted 38.2% Fibonacci retracement of that third wave. So we will expect a shallow correction to the zone of $123.52 for this stock Costco, expecting it to in normal condition. Something like that. To the zone of $123.52 before the fifth wave of a higher degree will start. We will see. This is our expectation. The price does not have to fulfill our expectation. The price can print something completely different, which means it can come down to the 50% Fibonacci retracement level of that third area wave, all right, and so on and so on, all right. So this is it. So we are talking about the ending diagonal, a very popular and powerful reversal pattern that usually occurs in the fifth area wave. Now, we are not in the real fifth area wave, we are just in the fifth area, a fifth minor wave of the third wave of a higher degree. When we see the ending diagonal, which has the structure free, we'll expect a sharp move down and a deep retracement. This is the theory. Sometimes the reality of the market can be different from the theory. And also, when we see the ending diagonal, this is one typical example, that's why I'm recording this video. It's an ending diagonal, but it's an ending diagonal that is occurring in the fifth wave, in the fifth minor wave of the third wave. So our expectation of a deep retracement or a sharp move will be a little bit reduced or limited. This is the case here. So you see one move down, now it's slowing down. You may do another move down to the pink line and so on before probably coming near the level of 12352. That remains to be seen, all right? But the mistake that one can make here is to assume that, this is the ending diagonal, it's going to crash down, and you may not see a crash, you may see a gentle pullback because of the higher degree wave up. However, if this ending diagonal happens to be in the real fifth wave, which means the fifth wave of a higher degree, all right, we will not, in that case, we will expect a sharp correction and a deep retracement that will constitute the corrective wave of the whole area wave cycle. As you can see here, the area wave cycle is not finished here. Talking about the higher degree wave count, we are now in the third area wave. All right, so the area wave cycle is not completed here. The move that we are expecting here is a corrective wave that is correcting what? is correcting the third wave of a higher degree only. But generally, when traders see the ending diagonal, they think that this is the end of the trending phase of a higher degree. Don't think that way. You may see an ending diagonal. That ending diagonal may just be, okay, the fifth minor wave of another wave of a lower degree. The ending diagonal in the fifth area wave of a higher degree is the loudest warning for the bullish traders to come out of their trade before it is too late in an uptrend. The ending diagonal in the fifth wave of a higher degree at the end of a downtrend is the loudest warning to bearish traders and investors to close their bearish trade or to manage their bearish trade before it is too late. Very often one usually see a sharp move out of the triangle. So here we have that triangle. Apart from the market geometry that I was using here, trader also will use the height of the triangle. That's the pink line here, and we project it at a breakout point, something like that. So this is the height of the triangle. You can use that to project it down. Some trader will put it like this. Don't be surprised. So from the top out, some trader will put it like this. So be aware of it. When it's coming out of the triangle from this edge down, so this is bringing us to the 38.2% Fibonacci retracement level. So like the Fibonacci retracement and Fibonacci extension, when we are setting a target, we need to acknowledge other traders that not all traders are doing the same thing. So, all right. Other traders may say, George, that's not correct. You have to put it vertical. Good. Yeah, that's another way. So they will set their target. So instead of they will put it like this, straight down. Okay. Also coming here, the green line, or they'll put it to the top where the move is starting from, down to the pink line. So be aware of the level of 14207. There will be some trade coming up there, and the ultimate target 12352. Do not be surprised if the price drop down all the way to the 50% Fibonacci retracement level of the third wave. But normally, the characteristic of the fourth wave is shallow. Very often, we'll find a support in an uptrend near the 38.2% Fibonacci retracement level of the third wave. Same thing in a downtrend. We'll expect the bearish fourth wave to find a resistance near the level of the 38.2% level of the third wave. The bearish third wave. All right. So this will conclude this discussion today about the practical fifth Elliott wave ending diagonal technical trading tips. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video useful, give us the thumbs up. If you dislike it, mark it down. All right, doesn't matter. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about practical fifth Elliott wave ending diagonal technical trading tips. If you want to learn more about the ending diagonal, go to www.24elliottwaves.com. Click on the ending diagonal. All right. Happy trading to you all, and speak to you soon.